if you had a business that was guaranteed to grow and you could access that growth tax-free, and it created benefits, not just for your business, but also potentially for your key employees, I'm going to ask you, how big do you want that business to be?
Most business owners are funding systems that they don't control. Qualified plans, outside banks, diluted equity pools. They're taught to build wealth for others and hope some is going to trickle back from the value they add. But builders, they play a different game. This episode reframes infinite banking as a system you own, capitalized with intention, and designed for long term growth. What if you could start a business that was guaranteed to grow? Well, with tax-free profits, asset protection, and total control. How big would you build it? And how soon would you fund it?
Yeah, Jason, I think those are fantastic questions. We keep telling folks that infinite banking is not a product, right? It's a process. And the way that you're framing it now is it's also a business that you own. Those early premium payments, those are kind of like the startup capital, right? And something that really sticks with me with what you're saying is that your funding an IBC policy is like starting a business. Can you break that down a little bit further? What does that mean?
Absolutely. And it is starting a business. It's not like starting a business. It is actually starting a business, Jeremy. And it's an awesome way to frame it. We talk about all the time how we all have to be in two businesses. The business of making money, right? Business one. Business two is the business of banking or being the banker, the verb of banking. And so imagine this. You're an entrepreneur, business owner, really dial in, lean in, don't lean in too close if you're driving, but this is the moment where you understand, what if there's a system? Do you have enough risk as an entrepreneur? You take on enough challenges solving other people's problems. Why not have a system that is guaranteed to grow from the moment you fund it to the moment you graduate and you're no longer here? So you're going to build this system over time, one that's going to give you guaranteed growth, one that's going to guarantee to protect you from legal events, one that's going to be a tax-free growth. That means away from Uncle Sam. One that you control that's liquid. And what's your definition of liquid if you're listening? To me, it means not locked up in financial prison. And you're also going to have the guaranteed protection on top of all that. So if you knew, it'd be like if Jeremy, let's play a little game with me. Want to play a game?
Let's play.
So in our game, you and I are going to go into business together. Okay. We're going to build a business and we're going to capitalize the system. Now, these numbers are just for reference and they can be built specifically for you. But let's imagine, Jeremy, you and I put in an equal sum of money into our business in year one. And we're told in year one that, we have access to 60 to 70% of the capital. Okay.
Okay.
And we're like, well, it takes a little bit of time for a business to get going. It doesn't become profitable overnight. True?
Yeah, that's true.
Year two, we're going to put the same amount of money in. But year two, we're going to have access to 70+% of the capital. So we've seen a little bit of growth. We're closer to being out of the red. So we're feeling encouraged. Our business, Jeremy, is growing. Year three, we put the same amount in. And now we have access to 80+%. Year four, same thing. Now we have access to all of it. Dollar for dollar, whatever we put in, we can use tax-free. And we're starting to see this. We're starting to say, wow, it hasn't taken very long. And we're already at the point where our business is almost profitable. Year five, we put money in and we have more money than we put into the system. And it's guaranteed. And it's guaranteed to get better every year. Jeremy, if that was the equation all entrepreneurs were doing, because that's all we're trying to do as entrepreneurs is go out, create systems that add value, solve people's problems, and earn a living, right? If we knew that that was guaranteed and our efforts were guaranteed and all we had to do is capitalize the system, pay ourselves into the system to have protection, guaranteed growth, to have it away from the government, protected from attorneys, accessible, and protecting our business, how many of these businesses that you and I just built in 5 years to be profitable would we want?
I think that, if you got one business, just one of them, that it was guaranteed to be profitable, why would you not do that one, right? So I think a better question is, how big would I want that business to be? If I had a business that's guaranteed to grow, I'd probably want it to be as big as possible. And what I liked about what you said is a lot of folks need to remember this. Most businesses fail by year 5. We're talking about the business truly growing and exponentially at year 5. So if you're going to take all the heartache of starting a traditional business, with the vast majority of them failing by year 5, but this one is guaranteed to succeed and grow beyond that in perpetuity for life, right? This is capitalizing a system for life. How big would you want that system to be?
And Jeremy, what you just said something that really just struck me. And it's, we follow a lot of different thought leaders, and you hear a lot of them talking about how everyone likes to, the average person's job right now, like I saw this stat the other day, it lasts like a year and a half before they pivot and go to another job, before they pivot and go to another job. So really, everyone's going like an inch deep and a mile wide. They're not committed. They don't believe. They're not all in. But when you have a system that that the more that you capitalize into it, in Nelson's book, page 85, in this book, the second part says, if you knew at passive income time that every dollar you put into a system would come back tax-free, would you hesitate to put more in? And that's what Jeremy's saying with how big do you want to build it? And what I'm saying in the context of this, when you know it's going to work, when you know you can go all in, when you know that all the efforts you put into it are guaranteed to have results, how excited would you be? How much and how large would you want to build that system? And you can keep expanding it over time, whether you're adding other branch offices or different things. We're talking about some of the other ways you can use this in your business in this episode. But we're just getting into the understanding that if you want to go deep into something and you want something that's going to be guaranteed protecting your business and has lots of guarantees, it's transferring the risk to somebody else. As a business owner, Jeremy, how good do you think that would make folks feel if they didn't have to take on all the risk and hope something would work out?
I think it's a lot of safety and security, not to mention like clarity and peace of mind, right? From what I'm hearing you say is a lot of people are building a system thinking short term. You just said, what was it, an inch deep and a mile wide, right? They're not
Yes.
thinking like owners. They're not thinking long term, so to speak. And we've seen family members, we've seen people lose everything to the markets, everything. And we've seen people who have pain in their lives, but it's come from sacrifice, pain of working hard, of sacrifice, of doing all these right things and yet still failing at the end of the day. But what if we're able to mitigate that through proper design? And when I talk about design, I'm not talking necessarily about the policy design. I'm talking about lifestyle design, about how you're able to create a business centered on your life, because that's what these are. You are the business, and these policies are lifestyle design. And if you're designing them with intention and thinking long term, how big do you want that business to be?
Yeah, what you said there, like it's the thinking. It all starts with our thinking and rethinking our thinking. So if we know, like you just said, Jeremy, if we know that we're always looking for something that we can go all in on. Like we all want something that we can be passionate about, that we can do, that we love. And the results are guaranteed as long as we keep doing the things. Like imagine what it'd be like being an entrepreneur then. I mean, I don't know if we'd actually would love it, because you would know that you're always going to get what you want. You would know that the results, as long as you put the effort in over a period of time, it's going to get better and better and better as you go.
That's true. This business isn't just guaranteed, it's actually easy. All you've got to do is sit down and answer what is meaningful and what's manageable.
It's manageable.
Answering those two questions help you create a policy design that all you have to do at that point is capitalize it, right? You put in your premium deposits and the engine starts working at that point and is guaranteed to grow. And your cash value will exceed the amount of premium that you've injected into these policies. That's just the nature of the product. It's one of the reasons we love the product. The process is banking. Let's get that very clear. We're talking about a process. Right now, the guarantees and what we're talking about with the growth, that's the product that we use to implement the process of banking.
Yeah, they're just the fun little, like the sexy part of it, right? Like the things that are hard to compare with anything else because it's the best system that's out there. It's the best product that's out there. But we're never talking about that. We're talking about the process and the thinking and the focusing on something that you can build that's going to be meaningful and manageable for you simultaneously. Something that you know, because events are going to happen. Life is going to throw curveballs. Your business is going to be challenged. It's going to be challenged by new technology. It's going to be challenged by changing markets. It's going to be challenged by different things. So whatever is going to supply the funding for your business, it should be something that is guaranteed, something that's manageable, something that's growing tax-free, where it gives you the opportunity to protect yourself more. And that's really what we're talking about here.
Yeah, I want to go a little bit deeper into the product now, right? Just the sheer nature of the product. But let's start off with a question, okay? What happens if your business loses its most valuable asset? The most valuable asset in a business, especially a brand new one, it's likely you, the business owner, is it not? And so
Yes.
let's start businesses with partnerships. The greatest risk to a business isn't outside competition, it's losing that key partner or that key employee or even yourself, dare I say, right? And so that gets into key person risk. By the nature of the product that we use, we're helping to mitigate key person risk. And a lot of folks have cross purchase agreements. I've had cross purchase agreements in my life. We design them for the living benefits to practice banking with them, though. Doesn't that
Mm.
make sense?
Yeah, 100%. And go a little deeper on this, Jeremy. So with key person, you're looking to protect the business. Like you have the money that's going to be on your personal side, in your personal side of life, but then in your business, you might not want the money going back and forth over the river, right? You might have a certain amount of money that's in the business that is there earmarked for certain things in the business. And then you have people that if they left, it would, whether it's you or maybe it's someone that you're grooming to take over the business later, if they leave or they pass away, you want to make sure that you're protecting the business financially, that
Yeah,
you're building something that's going to make sure that that business that you spent all this time building can continue on if you're not around.
yeah. Can I give a personal example on how I
Yes,
did?
please. Yes.
So I have a partnership with my real estate business partner. Okay. We do development, we have rental properties. We kind of discussed this on previous episodes. Inside of our operating agreement, we have a cross purchase agreement. So, what does that mean? If there's death, disability, or divorce, something that happens to either of us, again, our greatest asset is each other inside of this business. We are partners, 50-50 partners. Well, if something happens to us, what happens to the business, the survival of the business? We're securing that with the death benefit that's provided from the product of whole life insurance. So if something were to happen to me, my wife doesn't become my business partner's new business partner. For one, she
Yes.
doesn't have the expertise, but based on the estate, she would end up getting my shares inside of the company. So to buy out my shares, there's a death benefit associated with it. What's another way that happens with it? Let's say that you have a key employee. That key employee, I cannot survive without this key person in my business. Well, if that person were to leave unexpectedly, what would your business do? You'd likely have to go hire someone else. And that's what that death benefit allows you to do. It's a risk mitigator. The insurance company takes on the risk in order to help the survival of the business. So we can keep doing what we as business owners do, which is generate cash flow. So as a cross purchase agreement, for any single partnership that's out there, a simple cross purchase agreement helps secure the business and the growth of the business. But think about this: what if you designed it for banking? So how do we use our cross purchase agreement? Well, we develop cash value inside of it as an emergency fund for the business in case something happens. But my favorite way to do it, Jason, taxes, property taxes every single year. I know they're coming. So we allow the tenants to pay the premiums on these cross purchase agreements. We
Mm.
pay cash value out every single year to pay the property taxes. And what did we just do? We have one asset funding another asset that has created safety and security for our business. That's the power of using our cross purchase agreement designed with an infinite banking policy.
That's incredible. That's a great story. It shows people how, with a little bit of long-term thinking and a little bit of creativity, not only can you control it, you can protect it, you can guarantee it. And you can do it away again where it's away from Uncle Sam. This helped a business owner do establish. Her and her husband have owned the business for 10 years, and now it's starting to get very profitable. Now they're starting to buy other businesses, and they buy a lot of equipment because it's a construction business. It's a actually demo business. And so they're protecting each other, right? By doing the key person insurance. And they're also able to use the money that they're putting in the policies to protect their assets, to maybe purchase more vehicles if they need them. Now they're building up the capital in the system to go purchase this next thing, and then they pay themselves back, keeping all the money in the business while they're doing it, right? So it gives them the protection and the growth, and it also has them do it in a way where they're in control of the capital in the system. And if something happens to either one of them, the other one is protected.
Yeah, I mean, a lot of the entrepreneur fears that are out there are expressed by everyone. Okay, what if something critical happens, like a mistake or an error, or what if I lose a key employee? Will my family or will my team be left scrambling? Will everything I built literally unravel overnight? But we, by designing these cross purchase agreements and funding them with whole life designed for banking, you get both the death benefit that calms the anxiety. It calms the anxiety that you have as an entrepreneur. But by the cash value, we're able to enjoy the benefits of the living side of it, right? The living benefits that come with owning whole life.
And that's what we talk about on every single episode, almost every episode, is we're kind of giving you what those living benefits are. And you guys, if you're listening, you know what they are. If you haven't been listening, they're simply, you have tax-free growth, you have accessible growth, so meaning it's liquid. You have, it's protected against liens and judgment because it's state statute. It is not federally regulated, which we love about whole life. The government's not involved in it. Oh, it's in a stable environment. That's super important. And we're only working with companies that have been profitable for 100+ years consecutively. So you want to know your partners in these cross purchase agreements, in these key person agreements, and these different things are partners that you can count on over the long haul. So as you scale your business, as you grow your business, as you become more profitable, as you expand your system, well, you can do more with your banking system then.
Yeah, we actually have a whole episode, another episode exactly on that, on how this is a partnership. Because what you're doing is you are partnering with these mutual insurance carriers as well. So you are an owner, a part owner of that company, which entitles you to what? Dividends. And dividends do what? Well, we're reinvesting back into cash value that we can access tax free through policy loans. And that's, if you think about this literally as a business, and you're kind of seeing the holistic ecosystem that Jason and I are describing, the power behind that is it's like, why would you not do it? Okay. If it was guaranteed to grow, we'll ask you the question again, how big would you want it to be?
Yeah, how big you want to get and how many do you want, right? Is the other question. Jeremy, before we came on air, I was telling you about another client who, she's an eye doctor, and she has some valuable people on her team. And she said, to me, hey, it's really hard to scale the business because it's hard to find good help these days.
Mhm.
And I gave you a stat earlier, people are moving or leaving their jobs every year and a half on average. And so I know, Jeremy, you have a certain amount of knowledge on a secret weapon for retention, something that is going to help business owners not only scale their business, protect their business, but how do you get loyalty without losing control or losing that person that you're hoping is going to stay with you in the long haul? So, Jeremy, what is that secret weapon that's built for retention?
So let's talk about what a lot of people typically use for retention. It's 401ks, right? And in the interest of where I work, my W-2, I have a fantastic 401k program. There's a vesting period that's associated with it. Some businesses offer PTO time or healthcare, dental benefits. Some of them are qualified accounts. And what we're talking about here is actually designing a non qualified deferred compensation plan. So non-qualified as in it's not a 401k, it's not an IRA, okay? Deferred compensation as in we take a portion of what would be considered income and we're deferring it to a future date for a transfer of benefits from employer to employee. So non-qualified deferred compensation. And it's the plan that has to be put together. It's not just by us. You have to bring in an expert, typically an attorney or business attorney, and they structure these for key employees. Again, every state's going to be different on what's going to be out there. There are ERISA laws that you might have to abide by, But these NQDC plans, if you end up devising a plan that has a like I have a key employee, but we don't have the ability right now to pay PTO time, personal time off, or healthcare or dental. But you know what I could do is, because as a key employee, I have an insurable interest as a business owner for the things we just talked about, loss of life. And I can put a high cash value whole life insurance policy on this key employee. And through a vesting period, which is no different than other business owners, they have vesting periods. After said vesting period, I can actually transfer ownership of this policy to that key employee.
Hmm.
So whether you design it for high cash value and it becomes, again, as we say, over time, you will have more cash value available in the policy than net injection. You're creating kind of a pension program for some of these key employees. What are some of the things that the business owner can use before the vesting period? Well, you can use it for the business itself as an emergency savings or as a rainy day fund, whatever it's going to be, for business growth or acquisitions opportunities. But what about turning it truly into a real NQDC plan? I'm going to use the cash value to fund PTO time. I'm going to use it to help fund health savings account for my employees. So literally the employees get 100% of the benefits. I'm going to open it on my key employee. It's going to build cash value over time. We're going to secure them with a death benefit. So if something happens, we're also taking care of their family. But in the event of the living benefits as well, we're going to design it where they get all the benefits too. The PTO, the healthcare, the dental. I'm going to provide you employee benefits because I want you to stay with me long term. And after a vesting period, I'm going to return this policy back to you, the ownership, and you're going to design it for whatever you want. If you want to keep it as a pension plan and it continues growing uninterrupted, by all means do so. But you have a policy that you now have decisions and options, and that's going to be designed for the business owner and for the key employees.
Man, Jeremy, do you think more people would stay loyal to their companies if they had a plan that made them feel like that? Like as you're going through, I was thinking back to my corporate, life in corporate America and thinking, man, that would have been really cool if I understood the plan was for me, if I understood that it was also helping the company reach its goals, but at the same time, it's going to give me time off. It's going to maybe, pay for some of my health needs, or it's going to be there as something when I leave after putting my blood, sweat, and tears into the company, that I'm getting rewarded for the loyalty, for the helping and the scaling, and doing it in a way where I'm not assuming all the risk. For years, I piled in as much money as I was allowed to when I was trying to play catch up, being an artist and then going into corporate America and doing other things and starting to make decent money, where I was putting as much as I was allowed to every year. And I just never understood how it could possibly work out. I just didn't understand how you could build something up to a big old sum and then you would draw it down over years, like that coming down the mountain that they tell you. It never made sense to me. I was always like, well, I don't know how long I'm going to live. I don't know what taxes are going to be. I don't know what inflation's going to be. I don't know what the market's going to look like. How could that plan possibly narrow the variables? And everything you just said gave back control to the person that's being incentivized.
Yeah, a lot of business owners actually fear risk of losing control, or I want to retain this key employee, so I have to give them equity in the company. This is a way to maintain control and gain loyalty at the same time. You don't have to give up equity. You can provide benefits to keep them around long term without giving up control, without giving up equity. It's truly a win win. You stay with me through the vesting period, and I am going to hand you over this asset that was guaranteed to grow and will continue to grow in perpetuity, right? Until the end of your life.
And if you're truly a builder, that's what you want for people. You want to be able to help lift them up. You want to be that rising tide that lifts all boats. You want to make sure that the people that are loyal to you and your company and your mission are being rewarded. And this gives you a way that you can do that without taking on unnecessary risk, without having them you're not transferring the risk to the person. As in the normal qualified plan, that's typically you're getting the risk transfer to you, right? It's away from the employer. In this case, you're building the system and the process and the thought process, Jeremy, is what I'm most impressed with, is about how these different plans work for people. Because as long as you're acting with that one behavior of making sure you're paying the business first, you're paying yourself first, you're taking control of things, and you're doing it for the long term, over time, you're going to build something that's really meaningful in someone else's life.
Yeah, and notice the word Jason keeps using over and over again. Build, build, build. We're developing a community of builders. That's what we're doing, not borrowers. These are building for the future. And these blocks, these cornerstones, the foundation of your wealth can be this sort of design. It's getting back to designing with intention. So you don't have to have the scarcity mindset. You can design with intention today, and you can have guaranteed growth for tomorrow. So again, if you had a business that was guaranteed to grow and you could access that growth tax free, and it created benefits not just for your business but also potentially for your key employees, I'm going to ask you, how big do you want that business to be?
To the moon. Let's go. As big as possible.
As we kind of wrap things up today, I want to say thank you, Jason, for being on this journey with me. It's been really great having kind of this dialogue back and forth and being able to share opportunities and kind of this growth mindset. So as we create a nation of builders, I want to say thank you for helping me and build me up as well.
Jeremy, that warms my heart. I receive it. And yes, it is fun being on the journey with other builders, people like yourself who have the mindset to go serve, to build up others, to make sure that we're all reaching our goals, but doing it together, right? We're not taught this in school, folks. We're not taught how we can go, and we're taught to be competitive. We're taught to compete against each other in sports and school with grades, with everything else. But now we're interdependent. Stephen Covey wrote that. We're interdependent, working together. So this acknowledgement went a little long, but it is meaningful to me. And I wanted Jeremy to know, because he doesn't like receiving these compliments any better than I do. So keep listening. You're already in banking.
You're just not the banker yet.
I like flip-flopping that. See you next time. Be blessed. Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.